Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me is Priyanka. Priyanka, good afternoon. What a choppy trading session we've seen today, right? Well, rather flat for the Nifty when it comes to the Nifty. Ended as flat as it could, but nonetheless held on to the 22,300 level. Sensex as well, 0.2% uptick coming over there. Nifty Bank down 0.1% around the 47,282 mark. What was the sector or what was the place of worry in the markets today were the broader markets, because you had the Nifty Midcap down 1.5%, Nifty Small Cap down a whopping 2%. So, well, they have underperformed their benchmark indices, and how. But on the bright side today, you had a few Nifty winners today. HDFC Bank was the top Nifty winner today, up 2.2%. And sectorally also, when you look at all the indices, Nifty IT was the only one holding in the green, held on to the green by heavyweights like TCS, LTI Mindtree, Infosys, all of these stocks in the green today. And among the Nifty 50 winners today, in the Nifty 50 losers, you had Adani Enterprises, Grasim, Cipla, Adani Ports, SBI, JSW Steel, as well as Bajaj Auto. But even when you take a look at the broader markets today, you had Swan Energy down and out 20%, locked in lower circuit. Godfrey Phillips, MOIL, Hoodco, STVN, UCO Bank, all of these stocks deep in the red. On the bright side, you had HEG Limited up 8%, Linde India, Phoenix Mills, Torrent Power, India Mart, all of these stocks did pretty well in today's trading session. Moving on, then there was one stock in focus today, that was BSE, on the back of NSE that went ahead and cut its transactional charges by 1%. You saw the flip side of this news on the stock of BSE. That was down 5% at one point of the day, ended the session lower by 2.5%. And well, the big story of the day has to be Aditya Birla's merger with Aditya Birla Finance. In fact, the Aditya Birla Finance will be merging into the company Aditya Birla Capital. Aditya Birla Finance is the wholly owned subsidiary of the company. And well, there will be no change in the shareholding pattern of Aditya Birla Capital once the merger goes through. But Priyanka, take us through everything else that happened in the market, all the market moving stories, and tell us what else happened.
Absolutely, Snehi. In fact, one thing to be noticed is that the Nifty holded on to 22,300. Why? Because the heavyweights were giving the strength.
Absolutely.
Talk about Reliance, talk about HDFC Bank. They closed in green also. IT was the biggest support. Looks like the market is clearly trying to take support or is in a wait and watch mode for the global cues. India CPI figures have to come. US CPI figures are awaited tonight, so we react on it tomorrow. UK GDP numbers, India advanced tax numbers are to come. So these are the cues which needs to be watched and monitored for the whole week, and that's how it looks like Midcap is again in a shaky mode. Talking about the other some stories, but since you mentioned, I just want to add ITC also, since BAT also confirmed the British MNC confirmed evaluating a possible disposal of the small part of BAT's shareholding in ITC, which did weigh on the stock. And however, the entire sector and stocks were in fact hammered today because there was a complete shakeout in mid-cap space. The comfort of the safety of margin looked like only with the large cap banks, IT stocks, and to some extent the heavyweights. But then moving on to some other stories, SpiceJet, we did saw some restructuring. Amid restructuring, there's the commercial team which has started leaving. A lot of executives have resigned. That was one news which was to be watched out for the whole day. SpiceJet, and of course, NCLT upholds Jet Airways ownership to Jalan Kalrock. So that has to be also watched out. What are the developing stories at this end? But these are the few of the stories, and what lies ahead for markets now. Kunal joins us with the more insights on market index levels also, and what are the top trades that he's tracking. Good afternoon, Kunal. Clearly, mid-cap and small cap, another weakened day. But then the kind of range we saw in Bank Nifty, both on the stage, 700 odd points in Bank Nifty, too much of volatility in the whole day, but Nifty to hold it on to its gains. What are you making out of the market? Is US CPI going to give us some respite tonight?
Good afternoon. So I think it's been a very dual kind of a market, because on one hand, you've seen the large cap stocks looking quite okay for themselves. So yes, a few of the large cap stocks have been on a slight corrective mode, but when we look at this in the entirety, I think the large cap stocks have been doing reasonably well for themselves. They've been managing to protect, one of the major reasons why the markets have, or the indices have not been as volatile as we would probably have seen the mid caps and small caps. And the other end, of course, is how the mid caps and small caps. Interestingly, the small cap index is now back below the 50-day moving average, and I think it's just about few percentage points away from retesting the 100-day moving average. And the mid cap index, for the first time, I think if I'm not wrong, in the last 5 months, has managed to close below the 50 DMA, which means that one thing is very certain, that the markets are looking at correction towards the portfolio sides, which is bound towards the mid caps and small caps, but the large caps are the place where I believe there's a lot of resilience as well as sturdiness. I would sense that we could probably get into the similar texture of the market going forward also, because there is hardly any major volatility on the India VIX or rise in the India VIX that could trickle into the Nifty and the Bank Nifty in terms of a direction. So you may have those intraday movement on the indices, but it may not result into any kind of a major breakdown or breakout for both the Nifty and the Bank Nifty.
All right, with that view, Kunal, also tell us what stocks have made it to your radar in a market like this, and what are you picking for our viewers?
So I'll go with 2 buy calls. The first one is actually a Ban Poonawalla FinCorp. That's a chart which is looking extremely strong. In fact, I'd given this buy call yesterday as well, expecting the stock to get into a turnaround mode after a sharp correction of more than 15 to 17% the stock had seen from 500 plus levels. So excellent candlestick pattern for the stock. Great volumes in the last 4 days. Would sense that the stock should see a very strong up move from current levels, revising my targets higher to 510 for Poonawalla FinCorp. It is good to get a fresh buy even at current levels with a stop loss at 440. And HDFC Bank today gave a classic inverted head and shoulder breakout. It's a slanted inverted head and shoulder pattern for the stock, but a breakout nevertheless about the 1450 mark. So would suggest a buy with an immediate target of 1500, stop loss at 1440.
All right, HDFC Bank, and yes, you did mention about that, Kunal, also that Midcap did find support at 1250 DMA, which has to be watched out for. Thank you so much for this view and the stock picks that you shared. But then, since we spoke about the broader markets, with the broader markets bleeding off late, are the mid and the small caps set for more consolidation, or this is just a blip over the short time? Listen into the inputs which we gather from the chat with Helios Capital Samir Arora.
Bottom line is that it has never been the case anywhere in the world that small caps systematically beat the large caps by maybe more than 0.5%. Even that is not easy. So whenever the outperformance is 15-20% a year in some phase, you know that by the time the cycle is over, it has to go away. Because the only difference between this round of small caps and previous years is because of the kind of buyers, that is the absolute retail guys, because I see on Twitter, because Twitter thinks that I follow all these things, so they give me related content, is that people say, oh, this is only 20p, so how can it be expensive? This is what they've been used to, that a 20p is supposed to be very, very reasonable for unknown small companies getting 100 crore order from somewhere where they'll make maybe 2 crore profit. All these things they have to give up. There's nothing they can do. Some excuse will be found by the market to correct. The outperformance is unrealistic and not in line with any form of history, provided the cycle is over. If you see in the middle of the cycles, it would have been similar outperformance in previous phases also. So it's basically not an avoid, but a very, very over scrutinized thing now to buy a small cap.
All right, viewers, with that, we'll slip into a short break on this edition of Your Trades. We'll be right back with more news and updates.
Welcome back. You're watching Your Trades in a falling market like today's, where most of the mid-cap and small-cap stocks find it difficult to hold on to the ground. One stock which was clearly in green was Linde India, 7% up today, and the reason being, they have all the positive reasons to be. Linde India could be one big winner on the back of the 3 new semiconductor units being approved. Samir explains us why.
Well, the global parent company, if you see, is expected to be part of the Nasdaq index from March 18. But on the India front, Linde India has been buzzing on the back of the approvals coming in from the government for the semiconductor plant. Now, the construction of the semiconductor plant is expected to begin in the next 90 days, and a total of around 91,000 commitment has been given by Tata Electronics. Tata Semiconductor Assembly Test Company has given a commitment of investment of close to 27,000 crore rupees, while CG Power has given a commitment of investment commitment of close to 7,600 crore rupees. So how does this impact Linde? Because if you see, high purity gases are very critical when it comes to semiconductor manufacturing, and gases can create the chemical reaction which is needed to shape a semiconductor's electrical properties. Now, various types of gases are required. To name some, it's nitrogen, oxygen, argon, hydrogen, and many other types of gases. Now, Linde India globally, if you see, derives nearly 22% of its revenue by selling such type of gases to electronic segments in the APAC region, and its key customers include Intel, Samsung, TSMC, which are the three largest semiconductor players globally. So even in India, the preferred player of choice or the partner of choice would be Linde India for them, and usually around 5 to 6% of the total investment done for semiconductor goes towards this industrial gases as well. And that is one of the major reason why Linde India has been buzzing in trade, because as and when the semiconductor plants start their operation, a lot of order could come in to Linde India for this industrial gas, and hence the stock has been buzzing in trade.
All right, Swami, well, thanks for taking us through that. And another stock that was in focus today, up and away, was Zuari Industries. That was buzzing in trade today, up as much as 10% at one point in today's trading session. Still managed to end the day with a 3% gain. So my colleague Sharad is joining us to decode what led the rally in this stock. Sharad.
Well, a small cap company, Zuari Industries, is in focus. The stock has been buzzing in trade today, and after a long period of time, they have come up with their investor presentation. Now, the core of this presentation is, of course, the guidance ahead for the group as well, and also the investment values which they have in the other listed companies. Now, looking at the guidance, they expect to deleverage due to asset monetization, and also they'll be focusing on high growth areas. Now, the businesses come in the EPC, sugar, power, financial service, real estate, and even furniture businesses to go about with. But the interesting number to look at is what is the quoted value of investments across Chambal Fertilizers, Zuari Agrochem, Mangalore Chemicals, and even Texmaco Rail. And that entire market cap, as per the presentation, comes more than 4,000 crore rupees. So the number is market cap roughly 900 crore rupees, and the market cap of the quoted investments above the 4,000 crore mark. Also importantly, we asked about what the entire structure would be, and we did create a structure. Over there, we kind of calculated the total contribution of the EBITDA, and the three important businesses come in from here. The first one being Zuari Infra, which is largely there in the real estate business, Zuari International, which is in the FMCG business, especially on the sugar and salt category, while Zuari Management Services is providing HR solutions. So the bulk of EBITDA contribution, say almost you could say 70 to 80% of this EBITDA contribution is coming from these three main businesses. Afterwards, we also having the sugar, power, EPC, financial services, and the insurance business, where the remaining contribution is coming from the EBITDA.
All right, thanks Sharad for breaking that down, and hence the reason that Zuari Industries, we've seen from December, from the levels of 193, the stock has surged above 300 also, in fact touched 350 also. But one more stock which was clearly buzzing in trade today, that was Aditya Birla Capital. The boards of Aditya Birla Capital and Aditya Birla Finance approved the scheme of amalgamation of the two companies to further create a unified operating NBFC. In fact, Snehi has done a detailed research on it. Snehi, tell us more about it.
So, well, yes, like you mentioned, Aditya Birla Finance will be merging with Aditya Birla Capital. Now, Aditya Birla Finance, the wholly owned subsidiary of Aditya Birla Capital. Yeah. What's key to note is the rationale behind this. It's a rather sorted merger and a mega one coming in at that. The rationale is simplification of structure, better access to capital, operational synergy getting improved, enhanced value creation, and reduction of legal regulatory compliances as well. What's key to note is this is being done to ensure the ongoing compliance with the scale-based regulations applicable to NBFCs as recently notified by RBI as well. Now, the merged entity would be engaged in two businesses. The first would be lending business, which is the NBFC business of the erstwhile AB Capital, and the housing finance business through its 100% subsidiary. And the other one one would be various non-lending financial services and ancillary businesses directly and indirectly via subsidiaries and associates. What's key to note is post-merger, the shares of Aditya Birla Finance and Aditya Birla Capital will stand cancelled. There will be no consideration for the amalgamation, and there will also be no change in the shareholding pattern of AB Capital whatsoever after the merger. So, well, yes, Priyanka, mega merger coming in, and let's see what the timeline is. Let's see when the ball starts rolling for this one.
Absolutely, because Aditya Birla Finance is also an NBFC upper layer.
Absolutely.
Yes, correct. Okay, let's go further and let's get you more the other stocks which were buzzing in trade today. Gaurav has made a compiled list of the stocks in news. Gaurav, take us through.
Well, yes. First, let's talk about BSE because the stock was down almost 6% in today's trade. And this is because NSE, one of its competitor, is now expected to cut the cash and derivative transaction charges almost by 1%. Now, being the only listed player in this segment, BSE faced some kind of negative outlook from the investors, and that is why we saw the stock was down in today's trade. Let's also look at Sterling Vincent because the stock was down almost 5% in today's trade. This is because the report suggests that Shapoorji Pallonji and company, which is one of the holders of this company, which holds almost 12.75% stake in this company, is expected to sell its stake, and that is why we saw the negative outlook coming up on this company also. Let's also look at K Fintech because the stock was down 5% in today's trade, and this is actually the fourth consecutive day where we saw the fall in stock price. If we look at Nifty 500 constituents, this was actually a top loser in Nifty 500 constituents as well, because there are reports that suggest that 2% equity has changed hands and Kotak Mahindra Bank is likely to be a seller. Let's also look at ITC because British American Tobacco, which is one of the holding company, is now evaluating possibility of disposal of the small part of its stake, and that is why we saw the stock was down almost 1% in today's trade. And lastly, let's also keep an eye on India Mart Intermatch because the stock was up almost 2.5%, and this is because now Jefferies has maintained buy rating with a target price of 3,400 rupees, which gives a healthy upside of 30% from these levels. They believe that they are expecting, companies expecting the subscriber addition to pick up from 3,000 subscribers per quarter to 6,000 subscribers per quarter in FY25, and this will boost the volumes as well as earnings for the company, and that is why we are seeing some kind of bullish view coming up from Jefferies, and on back of this we also saw investors also being positive on the stock. So all in all, we will keep an eye on all these stocks in tomorrow's trade as well.
Well, Gaurav, absolutely. We'll be keeping an eye out on all of these stocks in tomorrow's trading session as well. But viewers, with that, I'm afraid we've completely timed out on this edition of Your Trades. Thanks so much for watching.
Samir, hi, good to have you on the show as always. I think first things first, everyone just wants to know what your conversation with Ray Dalio was all about.
Actually, I didn't tell him that I had read the book, which is an expose on him. I only told him I read these books on principles and then I told him that the book on cycles was a bit complicated. And there was another person with him who said only a bit. So I said, no, I was being 30 years. It's very complicated. So I had not met him before, and it was just a chance encounter at the airport.
And what a pleasant one. No Taylor Swift conversations? Because
No, actually,
that's what everyone wants to know.
Correct. But it's just that I do, I get to meet all these guys sometimes just like this.
Yeah.
But it's not that some of them, like Paul Tudor Jones, is a bit of my friend, but others are, you just meet them at some place or the other. But you have to, first of all, instantly recognize them and then instantly bring up. That's all. That is the highlight more than anything else.
Yeah,
And
absolutely.
then be a bit shameless in asking for a photo.
That you mastered, I'm sure, by now.
Because many of these fund managers, they all think that they are big heroes, so they are shy in some sense. I am not shy.
Yeah, you're not shy for sure. But anyway, here's to more chance meetings. But what's with the market right now, Samir? And we were just looking at the data points. It's been a very slow grind, but the small cap index nonetheless has fallen 10% from its peak. You think there's more to go?
Which is not a lot, and it has to be more. If you look at it, that what happened in 2018. So I just on Bloomberg saw 2-3 days ago, what was the performance of the mid cap and large cap and all these indices from, say, December 2019, go back 10 years. So go to 2009 December or something. And in those 10 years, you will see that small caps had actually maybe slightly underperformed the large cap indices, even though there were two big phases where small caps did very well, which is 2014 and 2017. If you end all these things at the end of 2017, it looks, wow, small caps are doing so well. And then 1 year comes 2018 and everything goes away. Bottom line is that it has never been the case anywhere in the world that small caps systematically beat the large caps by maybe more than half, 1%. Even that is not easy. So whenever the outperformance is 15, 20% a year in some phase, you know that by the time the cycle is over, it has to go away. Because the only difference between this round of small caps and previous years is because of the kind of buyers, that is the absolute retail guys. Because I see on Twitter, because Twitter thinks that I follow all these things, so they give me related content, is that people say, oh, this is only 20p, so how can it be expensive? This is what they've been used to, that a 20p is supposed to be very, very reasonable for unknown small companies getting 100 crore order from somewhere where they'll make maybe 2 crore profit. All these things they have to give up. There's nothing they can do. Some excuse will be found by the market to correct.
So you think we're already in that 2018 kind of scenario? This is
No,
going
no,
to
no.
be the year of
2018 was a
small
bit
cap
aggressive. So
correction?
2018 was a bit high, and there is no need to immediately associate with the 18, where there was a capital gains cut, and then there was a equally sharp maybe rally in 17. But it has to underperform, let's say, gracefully, if nothing else. But either way, how does it matter whether it's graceful correction or a sharp correction? Because if you know that broadly the outperformance is unrealistic and not in line with any form of history, uh, provided the cycle is over. If you see in the middle of the cycles, it would have been similar outperformance in previous phases also. So it's basically a not an avoid, but a very, very over scrutinized thing now to buy a small cap.
And I think the messaging from the regulator yesterday as well, we had
Correct.
Madhvi Puri Buch as well speaking about, I think the writing is pretty much on the wall. But, Samir, irrespective of all of that, what's surprising is the kind of appetite that's still there for, small and mid caps.
But
I mean,
actually,
people
that is
just are
okay.
so greedy right now.
No, the point is that, people have to spend time and money on learning. So you can learn by just quickly losing a lot of money also. It's all learning. So everything should be taken positively. You can learn either by looking and reading, or you can learn by yourself doing it, when knowing that in previous hundreds of years of cycles, these things have not happened. But many people insist on learning on their own, which is okay. So lose a little bit. It's part of learning. Nothing wrong with that also. Or you can go on the net and just see previous cycles and Indian cycles, US cycles. You can see every cycle in the world, and you can see in which phase was it outperforming and whether it sustained at a big picture level. There will always be some stocks which will graduate in front of you, and therefore you can't take individual stories and say, see, I bought Amazon and it went up or something because it was small cap. See, at an index level, at a market level, and it is very apparent that you cannot have systematic, significant outperformance, or even literally any outperformance. You can see in US if you want. Go and see the US index before 19, you'll see nearly same performance. And there it's a mirror image of India, that the large caps since 20 have massively outperformed. And therefore, although it's not working yet, people are talking about buying equal weight index and the Russell 2000, which is buying the smaller caps, or an equal weight index, completely opposite of India, where the large caps have done badly and the small caps have done well. But you see any period before, broadly they converge. So what is so different this time that in US is that way? Because there are 7 stocks doing well, which actually have more justification than the Indian small caps doing so well, I think.
Or maybe, Samir, they can just tune into ET Now and watch you as you dole out your advice and take an investment philosophy. But that aside, does that theory really hold true when it comes to those PSU banks as well, that maybe now the party's over?
No, PSU banks might have a little bit more of a story because the numbers are there, and it was that whether the PE should be 6 or 5 or 4. So there is something basic there. And I, by the way, separately think I am very bullish on the budget. So let me give you my logic. And part of that is the PSU angle. So first is that the Prime Minister has said that we want a, what is it, transformational budget or something like that. He has said it openly, quoted directly. Second, they said in this budget that next year's fiscal deficit will be reduced. I mean, they'll at least target, or I don't know whether it's a commitment, by 1%, nearly 1%. Now, for both these things to be consistent, you can't reduce 1% fiscal deficit and still make the investment. So let's say if I have to reduce 1% fiscal deficit or point X percent, and that means 25, $30 billion you have to save on your spending, either from subsidies, which can't be the case, or on your capital capex. And if you do that, there cannot be any transformational budget. Therefore, the only way it works is that you take one or two PSUs or two or three PSUs. I don't know whether you formally announce their names or not, but you just sell them off completely. This government in the current term, not even in some previous term, tried to privatize BPCL, and then there were talks about Concor. So you take any of these two, three, and you sort of completely sell them off or whatever percent, and then the rest of the PSUs get even more re-rated, and then you sell some of those. Then that money you can use in bigger investment or whatever, and still achieve some part of the current account of the fiscal deficit reduction. Otherwise, it's not consistent. All these lines are independent. You cannot reconcile them, according to me, any other way than to do this. Therefore, for now, my theory is that all these issues on whether we are bullish on the market, whether we are bullish on PSUs, we shall decide the day of the budget or after the budget. Not now, because right now I'm going in bullish till that day. Now, there's one issue which can blow this all up and bring back 2018, which is if you try to play with the capital gains tax on equities, that it should be 2-year holding, all these things you want to do, please do it next year. Don't do it in the middle of the first budget, which blows away all the good things and the transformation that the government wants to bring in next time. So please do that later. Otherwise, it'll all get dominated by the fact that the tax has been cut. And in 2018, one big reason was for the market to fall as much and for the small caps to fall 50, whatever, 60, 40, whatever percent they fell, is by changing the capital gains tax. So other than that one angle, I think it'll be a good budget, and I hope that is not brought into the first budget and blowing away all the good things.
Samir, why would you even put that thought out there in the universe?
No, that thought
Are
is
you
there.
anticipating something like that?
No. That is the only angle which is been there, and I want to. We have to say, please don't do that. Do it next year. They have do it whichever, but don't do it now and spoil the good mood that we are planning to have.
Okay. So since you skipped to budget, I'm assuming election is like given and it's all in the price.
No, what I meant was, no, it's because of the election that you can have a good budget, because then all this. What I meant was, there is no point when you are asking whether about the market now, there's no point in thinking this one, that week, when there is one big event for which logically it'll be big, simply because the government itself or the Prime Minister himself is saying transformational budget. So if it's a transformational budget, why should I today feel that I want to be today negative, then tomorrow I'll again become positive 15 days before the budget? You might as well go with that. And then on that day, decide properly whether, how much the market is up and what the announcements are and whether they are credible, or you want to be bullish on them or not. But right now, why should we? The world is also not bad.
Right.
It's not that the world is bad and we are too strong
Absolutely.
so that we should back off. It's okay. We are broadly, actually, maybe underperforming.
Absolutely. That does make sense, let's not bother about today, tomorrow. Let's just wait for the budget. But, I'm seeing your tweet that is just a couple of hours ago that you tweeted on ITC, because that's the BAT sale. You've rightly tweeted that first you were expecting the government to actually sell stake in ITC. That's what we were pushing for. Ulta hi ho gaya. That's what you have written as well.
So in the Suti days, in the Suti share sales, I used to tweet a lot saying, it is easy to sell this one. Government should not be seen as owning cigarette stocks. Therefore, we used to think at that time that BAT may be interested. But now it's the other way around.
Okay, Samir, great to have you on the show as always. Good chatting with you.
Thank you very much.
Vinod Karki, head of strategy at ICICI Securities, joins in on the show right now. Vinod, hi. The debate everywhere is whether to ease off from mid and small caps right now, and is it time to now bet on return of large caps? And, off late that quite clearly seems to be playing out as well. I mean, the small cap index is already off 10% from its all-time peak.
Well, yes, I think, it's a case of relative performance. You see from last year when the crisis in the European banks started, the Nifty itself is up 30% odd, so which is not a bad returns, given that expected returns from large caps is around 15% odd, which is quite good. But the thing is, mid, small caps have gone 60% to 90% if you go to the micro caps, So that's the problem. And over the last, that period, the earnings growth has expanded by anywhere between 15 to 20%, given which index you're talking about. Obviously, the smaller indexes have grown faster. But the point is, if the price increases by, let's say, 70, 80%, and earnings expanded by 20%, then obviously the rest is made up by fee expansion. So that is where the challenge arises. It's not a case that growth is not coming by. Growth is looking good. In fact, the GDP growth got revised upwards, which typically, and that too driven by investment rate, the real estate cycle and all picking up, which is typically good for the SME segment from a fundamental perspective. But I think the market is taking it a little ahead of its of the fundamental angle, and valuations are rising very rapidly. So that's the thing. It's a classic dilemma for small cap investing, where the valuations are getting more and more uncomfortable. But there is no denying the fact that broader-based economic recovery is gaining pace.
So I want to talk about in terms of when you look at it in certain names and real estate sector. As a whole, how do you see in terms of that up move going forward as well? We had seen a bit of a run up coming in. That cycle has started picking up for the real estate sector. Do you think that is something that could continue in the next couple of years?
Real estate, if you see historically, the up cycle or down cycles have lasted anywhere between 5 to 10 years, basically. So if you look at the current cycle, I think we are in the second year of the up cycle. So that means there is headroom left. And given the reforms like RERA and the whole crackdown on cash economy and all, and this will be one of the most transparent real estate cycles that India has ever seen. So I think the longevity will be there fundamentally. But obviously the stock prices are reflecting a little ahead. That's how markets behave. Wherever there is positivity and things are looking good over a longish period of time, things start to run ahead of fundamentals, which doesn't mean that the cycle will not be played out. The cycle will play out, the 5 to 10 year cycle that we typically see. So, but you have to look at valuations where things are a little okay. So I think some of these segments which are ancillary to the real estate players in terms of, let's say the building material or even the lenders, mortgage lenders, where valuations are reasonable. I think these are much better from a valuation perspective. Direct real estate players, I think, has run up quite a bit. So valuation comfort is lesser over there.
Interesting. Where else are you finding value in the market? Or would you say, it should be more of the same kind of strategy? Would it be the CapEx, infra plays, etc.?
Well, the CapEx companies, the industrials have made their move. But as I said, these fundamental moves continue for several years. So they especially some of the large cap names are not at very high valuation. They are at higher valuation, but they are not extremely high valuations. Some of the large industrial companies that we talked about in the report. So that is one. And if you look at the large banks, so when you're talking about the investment rate and investment rate driven GDP expansion and real estate cycle picking up. That doesn't happen unless you from the financials. So, and at this point in time, the largest contributors to the real leveraging cycle, the large banks, I don't think they are at very extremely high valuation or something like that. So from a growth and value perspective, we find large financial companies to be the best bet on the cyclical recovery that we're seeing in the GDP expansion, where the lenders to the economy will benefit a lot. And we are at the bottom of the NPA cycle. So there's quite a bit of time left before NPAs really start troubling us. So from a growth, NPA and valuation perspective, I think large banks are the best.
Large banks are the best that you could make a bet in terms of that. But in terms of overall the defensive sector, what I'm seeing is that in a report you mentioned that you're downgrading the defensive sector in terms of a play that is coming in there. Why is that so? Any specific reason for that?
So if you see the downgrades that we have seen in terms of earnings over the last year or so when this index movement has happened, if I combine the aggregate earnings base of, let's say, the FMCG, IT, and pharma together, the aggregate earnings base for 24 and 25 actually has been downgraded by 4 to 5%. That's what we observe. And there is no, I mean, we don't see that the valuations have reached a level where we can say they are very comfortable or they're getting very attractive, both from IT, FMCG especially perspective. So I think this is the space, the exactly opposite, where valuations are quite high. I mean, historically, if you see from a longer period of time, a decade or so, the valuations are on the higher side.
Okay, Vinod, thank you so much, for joining in with us, giving us your insights on the market as well. Thank you so much for tuning in with us on ET Now.